Well, the ETF revolution is outstanding. It's outstanding because it provides all these diverse sets of tools that an advisor can use to build healthier, stronger, more balanced, diversified portfolios. The major takeaways from today's panel is the energy that these major companies, Russell, NASDAQ, so active, have in supporting the evolution of product. I believe that valuations are very high, that if you look at valuations, very difficult as a risk on, risk off indicator, but it's tremendous from the standpoint of what forward 10-year returns are likely to be. So Buffett calls it expensive hamburgers. They weep in the Buffett household when the hamburgers are expensive. They sing hallelujah when they're inexpensive. The market, the 10-year probable forward returns for equities, by our measures, are somewhere between 2 to 3%. It's very difficult for the buy and hold investor. Most investors are expecting 8, not 2 to 3. When you're in the most expensive quintile of valuations, where we are today, it's probable 2 to 3%. When you are in the least expensive quintile, it's somewhere around 15%. If you are in the third or the middle 20%, the middle of the 5 different categories, you're talking 8% to 15%. We are in the cheapest. That's not attractive. What ETFs provide is the ability to include within a portfolio another diverse risk. Everything we do is a risk. Another diverse risk that has the ability to generate a return absent that 2 to 3% you're going to get buy and hold. So it's a great diversifier, and that's what ETFs are bringing. Well, our clients are other independent advisors. So they will outsource a portion of their money management, some of them all of their money management, to strategists like us. What we run is a tactical all-asset strategy. We, in short form, look at 100 different broad-based, large cap, mid cap, small cap, fixed income, all these different kinds of things that we can allocate to. Commodities, emerging market, international. And we look at momentum. It's a factor in all securities. So we look at momentum and say, where is leadership? And we position our portfolios in this all-asset strategy to up to 11 positions. So what we avoid are things like commodities that have been in a difficult period, emerging market, international equities. So an ETF strategist can provide these low correlating to no correlating solutions that add value within a portfolio. Well, it's exciting where things are going. We didn't have tools like this before. You couldn't get Japanese or European exposure and hedge the currency risk. If you try to explain to a client even what the currency risk is, a lot of eyes will just roll over. So these tools are valuable. It's exciting where the industry is going. If we will have another recession. In recessions, markets go down 40 to 50%. That will happen. So my view is sometime within the next year, I think we'll have recession in 2016. That doesn't mean that you have to sit on the tracks in front of this oncoming correction. The tools with ETFs that they provide really enable you to profit, participate, protect, and then when the opportunity comes, to be able to reshift.